In this video, I'm going to show you a way of using MACD, or the MACD indicator, to identify reliable buying and selling points. Combined with a stop loss, we can create a rule-based trading strategy. And I'm going to demonstrate how to use this on a daily chart of Euro-Yen Forex pair. I have shown ways of using the MACD indicator before, and if you're interested in them, I'll leave a link to them so that you can go and check those out later too. However, today's demonstration is slightly different and certainly the simplest and probably the shortest of all the developments that I've done. You won't need automated trading software like I use to use this strategy. All you need is a daily chart and apply the MAC indicator to the chart, which all charting packages have. I'll take you over to the computer where I'll show you how to use the MACD indicator to identify the entries for the strategy, and then I'll show you a couple of optimizations before completing the strategy and testing it out on over 13 years worth of past data. Once we've applied the MACD indicator to our daily chart of Euro-Yen, we're only going to be looking at the histogram on the MACD. We're going to be ignoring the two other lines that we see on the indicator. To demonstrate this on the chart in a moment, I'm going to be using a look back, I'm going to call it, of 3. And that means we're looking back at 3 bars previously to the current one. What we do is, for every current daily bar that closes, we then will count back 3 bars and we'll look at the value of the MACD histogram. If that value is less than the current bar, so the current bar is greater, then we go long. If the value of the histogram 3 bars back is greater than the current bar, then we go short. However, we might already be in a long position. So if we're already in a long position, then we're only looking for short trades. So we're only looking for a value of the current bar to be less than what it was 3 bars back. I know it sounds slightly complicated, but it's really quite simple when we look at it on the charts. Just note that we're mainly always in the market. So we're either always long or either always short, unless we do get stopped out, and then we might be flat for a few days. So if you're already confused, let's look at it on the chart where hopefully it will become a little bit clearer. For the majority of this test, we're going to be using data from 2008 to the end of 2018. And then once we've looked at the best inputs, then we can look at some out of sample data from 2019 through to August 2021. So on the first chart, we've got a daily chart of Euro-Yen, and I've got the MACD indicator down here, like you probably all recognise. Like I said, ignore the 2 lines. All we're looking at is the histogram level in red here. And at the moment, I'm using that look back of 3 bars, but we are going to test to see if there is a better look back than just 3. So in this case here, this is a short trade here. So this bar next to it, or the previous bar, we will be working on, because we're looking at every bar, and then if there is the setup, we literally take the trade, long or short, on the open of the next bar. So on this bar was the setup. So if we look at the MACD histogram down here, looking at the red value, so we can see in the little box there, it tells us that the histogram value is 0.33. Now we need to count 3 bars back, so 1, 2, 3, and then look at the value, it's 0.41. So that means that the value of the current bar at 0.33 is less than the value 3 bars back, and that's our indication to go short. If we were to look at the previous bar, if we were to have checked the previous bar where we didn't have a trade, if we look, the value is 0.42. And if we compare that to 3 bars back, 1, 2, 3, it's 0.34. So this bar at 0.42 is greater than 3 bars back. So that means that we should go long, but you can see that we're already in a long trade, and we've stayed long right up until the point where the value of the current bar is less than 3 bars back, and then we exit our long position and enter a short position, and vice versa. So we go long, short. Like I said, most of the time we are in the market. So while we have 3 bars as our look back on the chart, let's just have a look at the performance report and see how the strategy has worked over the years. And there's our equity curve. It's moving up. We have made money over those 11 years, but it's not the smoothest of equity curves, and there's huge drawdown periods. So I just used 3 bars back as a demonstration. But what I'm going to do is run an optimization to see where the best look back period might be. So here you can see an optimization looking at the look back starting from 1 bar, and if I go all the way down, I've gone all the way to 50 bars. And what I've done for you this time is I've exported this data and put it into a spreadsheet and created a bar graph. So just visually we can see better where the most ideal periods for this look back might be. So let's have a look at that. And here's that data in a spreadsheet. And along the x-axis here, we've got 1, 2, 3, 4, etc. That's our look back period. Remember, we were using 3 for that demonstration. But quite clearly, we can see a very good, strong area around here, around the middle. Anything from, I would have said, 16 through to maybe 29, 30. So the best being 26, some fairly strong values either side. So just to keep things rounded, I'm going to use 25 as our look back period and see how that performs once we apply it to the chart. So let's change the look back from 3 to 25 and recheck the performance report. And look at the equity curve, that's much nicer. I'm quite happy with that. Let's have a look at the average trade. Oh, very large average trade at 53,000. Well, that's equivalent to 53 pips. Now, there are no slippage or commissions added, so there's no trading costs added into this. But even after trading costs, that's a large average trade at 53,000 yen. So still good profit to be made. The next thing I want to do is apply a stop loss, because we need a stop loss. And as usual, I'm going to use a fixed pip stop loss just because they work very well for rule-based mechanical trading strategies such as this one. But before we do that, if you're already enjoying this video, then please hit the thumbs up button and maybe subscribe to the channel if you want to see more trading strategies a little bit like this one in the future. In this next workspace, we've got exactly the same strategy. I've just removed the MACD indicator, and I'll show you the optimization report for the stop loss. I've optimized from 0, so no stop, which is what we've already seen, all the way through to 5, which is equivalent to 500 pips of euro yen. Looking down the net profit, just briefly, no stop, we've got 9.5 million coming down, hit 10 million around about 100 pips, hit 10 million again around 200 pips. All of these seem to be quite high. We've still got 10 million at 2.9, which is 290 pips. Going further, we don't hit 10 million again. I see, without even putting this into a bar chart, I see a stable area for the stop loss between, I'd say between 200 and 290, 300 pips. So I'd probably choose somewhere in the middle. Let's choose 240. It's not the best, but it's pretty much in the middle of all the best results. So let's apply that and see how it looks on the performance report. Our equity curve is still something quite usable, hasn't changed that too much. The average trade has dropped, the stop loss has hurt the strategy a little bit, but we do need a stop loss. We've still got a large 42,000 yen average trade. Let's have a look at the annual period analysis. And over those 11 years, we've only got 2 losing years, so that's not bad. And the last thing I want to do is just look at that out of sample data. So in the next workspace, I've included the extra data, so 2019, 2020, and 2021 up until the end of August. So hopefully we're going to be making new highs in the equity. And we can see, yes, we are making new highs. If I put my cursor on where we had the chart up until before, which was about here. So where my arrow is here, that's where the original data went up to, and now anything to the right hand side of that is new data. we see from the green dots that we are making new highs. And that's all the development that we're going to do on this strategy. I told you it was going to be brief. So all we've really looked at is that look back period. We've gone from using the demonstration of 3 bars back, and we've ended with a number of 25 bars back. So comparing the current daily bar to the bar 25 bars back. And for such a simple strategy, I think it works quite well. I did briefly look at pound dollar and pound yen as well, using different look back periods, but found something that works both on those as well. So it's a fairly universal strategy, and it will probably work on more pairs, but making sure that you're getting an optimum look back period for each pair. I encourage you to test out some of those if you like this strategy. As usual, with this Euro-Yen strategy, I won't be trading it immediately. What I'll do is I'll keep an eye on it, come back to it in a few months' time, see if it's continued to perform, and only then will I assess whether or not I want to include it in my own trading portfolio. So I hope you can get some use out of the idea that I've shown you today, and I hope you take the idea and apply it to some other markets and find something that works just as well too. But until then, until the next video, this is Jared Goodwin, and thank you.